Hey guys, this is Andre from Wealthy Neighbor. Hope you are all doing well. So remember in the video about the credit card, I told you guys that one of the advantages of using a credit card is to extend our days of payables outstanding so we can do something with the money we use for paying the stuff we buy until we pay the credit card bill. In this video, I will show you guys how a money market fund works, and the closest investment to American money market funds we have in Brazil is called the Nubank bank account, which I will show you guys is somewhat superior to a regular bank savings account and can be the best alternative to invest our money really short term. What do I mean by really short term? Less than 30 days, which is the number of days of payables outstanding we get from buying stuff on credit cards. Please read our disclaimer, and if you agree with all the terms, let's go. I will start by defining a money market fund and then introducing the Nubank savings account for people who are not familiar with it. Then I will talk a little bit about the regular savings account we have in Brazil and why it's not as good as the Nubank. I'll also show you guys how to set up our own money market fund based on the Nubank savings account return, but without actually using the Nubank. And I'll talk about some taxes that affect the yield of our investments, in this case, namely the IOF, which is an abbreviation for tax on financial operation, translated in Brazilian Portuguese, and also the IR, which is the tax we usually pay for. Finally, we will close this video by crunching some data and performing some Excel operations, plotting some charts, and doing a regression from all this data to come up with a formula that shows us how much we can expect to earn based on the amount of days we have this money invested in the Nubank savings. So the question we want to answer from this video is, how much can we actually make by investing money short term and paying for stuff with a... And in order to answer this question, we will have to do that data analysis I mentioned before. But first things first, what is a money market fund? So basically, money market fund is a very liquid investment. And what does this mean? A liquid investment is an investment that can be easily converted to cash. So you don't have to wait a very long time, and you don't have to pay a lot of fees to convert your investments to. So money market funds are regarded as very good short-term investment choices in the United States. It's as safe as saving accounts, but offer better returns. So here in Brazil, the closest I could find to a money market fund is the Nubank savings account. So Nubank is an online bank, and they have this kind of hybrid saving checkings account as one of their products. So some of the points are that they offer free transfers between banks. Usually in Brazil, we have to pay to transfer between different banks, and it can be as expensive as 20 reais for each transfer. They advertise returns are 100% of the CDI. The CDI is a Brazilian index that's very close related to a certificate of deposit. It's based on the government interest rate, which is set by the TED or TED in the United States. But in Brazil, it's actually set by the Copom, which is our equivalent to TED. Since Nubank is an online bank, they don't have branches. So how can I deposit money in my Nubank account? There are two ways. First one, I can transfer from my regular bank account to the Nubank account. But remember that sometimes fees might incur, and it's not very attractive to pay any fees for that. The second option is to bill myself. So I can create those bills from the Nubank app, starting from 3 reais all the way to, I think, 10,000. And then once I pay this bill, the money I used to pay for it will be transferred to my Nubank account in less than 3 days. So this is a free of charge operation, which is much better than paying to transfer between bank accounts. So this Nubank account has no fees, we have to pay for it. They advertise daily returns. Only the gains, the interest gains on the principal are taxed. So tax on my investment gains will only occur when I withdraw the money. Some drawbacks. First, they don't have ATMs, so I can't withdraw the money directly in cash. I have also two options. I can either transfer the money from a new bank account to a regular bank account and then use the other bank's ATM. I can use the new bank account to pay for my other bills. And if I really need to withdraw cash from a new bank account, I can use the Nubank MasterCard credit card, but I'll have to pay some extra fees. How does a regular savings account work in Brazil? So usually when you open a checking account in a regular bank, one of those big banks like Bradesco, Banco do Brasil, Itaú, Santander, and so on, you get a free savings account. And usually you can transfer between those two accounts as much as you need. So a drawback, usually have to pay transfers between different banks. You can use the bank ATMs to withdraw cash from a savings account. Just need the bank debit card and there will be no fees involved. So the returns on the savings account depend on the target Selic rate, which is somewhat similar to the American interest rate, and nowadays it's 70% of the Selic rate. The Selic rate is a little bit different than the CDI rate I mentioned before. Basically, Selic is for consumer products and CDI is more for financial institution, but they have pretty much the same value and we can compare those values directly. So the bank savings accounts will give you 100% on the CDI and the savings account will give 70% on the CDI. The earnings on savings account are tax-free, which means you don't have to pay either IOF or IR. The returns on a savings account are calculated in a kind of weird way, so I'll try to explain it to you guys. So say I make a deposit on January 6th. Okay, I make 1,000 deposit and the returns on this deposit will only be credited to my account on February 6th. So it's a monthly compounding, kind of. If I have to withdraw any amount between January 6th and February 6th, the interest will be calculated on the lowest balance on this amount I deposited. So say I deposited 1,000 on the 6th and I have to withdraw 500 on the 20th. So my balance throughout this period, so my balance on February 6th will be 500 and the earnings will only be calculated on the 500. So say I have to withdraw 1,000 on February 5th, which means my balance will go to zero and the earnings will be calculated on the lowest balance throughout the period, which is zero. So even though I invested my money for 29 days in my savings account, I will not get any interest for it. because I withdrew it before what we call the anniversary date, but it's rather a monthly anniversary date. So I'll try to explain you guys the main differences between the Nubank savings account and the regular savings account. So it's clear that the regular savings account is not as attractive for us trying to invest our short term credit card money, because we usually keep our money less than 30 days. So if we keep this money in a regular savings account, we will not get any returns for it. So it's kind of pointless. Now, how to set up our own money market fund based on the Nubank savings account. So say that I don't want to become a Nubank customer, okay? What are my alternatives? I have to look for liquid investments that will be easy to sell. So one of the best alternatives here is a treasury bill or bond, which returns are calculated based on the Selic rate. The same thing as CDI, as I said before. So this is pretty much equivalent to the Nubank account yield. It's 100% of the Selic rate or the CDI rate. But for that, I need a brokerage account. I can't just buy these treasury bills by myself. So this brokerage account may incur also some fees, maybe a opening fee or maintenance fees. So be careful to research and see what you're paying for. Also, when we buy treasury bills in Brazil, we have to pay this Bovespa custody fee. So Bovespa is the financial institution that regulates the financial markets in Brazil. And the treasury bill fee is 0.30% per year, but it's waived for investments over 1.5 million Brazilian real. So if I don't have that much invested, I'll have to pay 0.3% per year. Even if I don't hold my investment for that long, I still have to pay proportional. Okay, so 1 month would be 0.30 divided by 12 and so on. Also, when we have to sell these treasury bonds before the maturity date, we have to sell it on the secondary market, right? For other people who want to buy it. And we may be vulnerable to some market volatility. We might have to sell it at a loss. And what selling at a loss means? In this case, we will not get the agreed return, which is the Selic rate. So maybe we will not make as much money as we expected to. We even have to sell those bonds at a loss if we really need the money. There is also this settlement in plus 1 day rule, which means that once we tell our brokerage that we want to sell the investment, we will only get our money in the next business day. So we have to wait for 1 day. Now, some considerations about investment tax and how investment tax work in Brazil. So here we are talking about lending investments, basically either the Nubank savings account or the treasury bill. In this case, both investments are taxed by the IOF, which means something similar to tax on financial trades, and this tax works more or less like this. It's only charged over the first 30 days of the investment. So at the first day, we have to pay 96.8% of interest. The second day, we have to pay 93.5%, and this is more or less linear all the way to the 30th day, in which you have to pay 0. And from the 30th day all the way to as long as we want to keep this investment going, we don't have to pay any more IOF. And the second kind of tax we have to pay in lending investments in Brazil is called IR, or Internal Revenue Service. The second tax works more or less like this. It's also based on regressive values, but the intervals are much longer than the IOF. Because here for investments hold less than 180 days, we have to pay 22.5% on interest gains. investments between 181 and 360, 20%, and so on, all the way to 750 plus days, in which we have to pay 50% on interest gains. So in our case, the short-term investments, less than 30 days, will most likely have to pay IOF unless we can hold it for the whole 30 days, and also 22.5 on our interest gains. Remember I told you guys that the regular savings account gains in Brazil are not taxed, but the return is 70% of the Selic rate or CDI rate. So we have a 70% liquid return. Here in the Nubank account or the Treasury bill market fund we set up for ourselves, if we can hold our investment for 30 days, we will have to pay 22.5% on our earnings. So compared to the 70% returns on the regular savings account, this will the Nubank account is better because even though we have to pay some tax on it, the returns are still larger than the 70% CDI. Observe that the less time we hold our money in these investments, the less we earn. And maybe if we only hold this investment for 1 to, 20 days, we will be earning less than we would have earned in the savings account. But hey, if we don't hold the investment in a regular savings account for at least 30 days, we don't get any interest at all. We only get interest on the lowest balance throughout the month period. So again, the Nubank savings account or the Selic market fund is more attractive. But how more attractive? How much do we actually earn? To answer this question, we'll have to do some data analysis here. So I spent 31 days following my Nubank account balance to show you guys what's the gross daily yield, the taxes, percentages we are actually paying, and the balance after tax, to see how much we actually make from this investment. Usually when we just want to estimate these numbers, we'll use the CDI return rate yearly, which we can get from any Brazilian finance website, divided it by 252. Why 252? Because the interest is only compounded on working days, which excludes holidays and weekends. And 252 is more or less an average of working days per year. So the result of this division is the CDI daily return rate, which we can use to estimate how much money we will have in 20 days, a month, excluding holidays and weekends. So since we have the real data, we will compare these values to see how much the estimate is close to the real data. Then we will plot all this data on Excel to see some trends and those pretty charts. And finally, we'll use the data fitting tool in Excel to draw a trend line throughout all these points, so we can get an equation that calculates how much money we'll have given the number of days the investment is on. And finally, we'll be able to answer that initial question: how much can we actually make by investing money short term and paying stuff with credit card? So now I will quit the presentation and move to Excel to perform the data analysis.